Joining us right now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, great to see you. Thank you so much for being here.
It's great.
Give us your assessment of the PepsiCo earnings, what you're expecting for the second quarter earnings reporting season.
So I think the main thing is that consumers are really having problems with a 25% increase in the cost of potato chips, right?
Yeah.
And so, it's great. Pepsi cut some costs. I'm sure they're going to continue doing it, but you're going to have time for people to acclimate to this, right? I think that when I talk to the guy on the street, I've been walking around New York all week, and, outside of our ivory tower of Wall Street, the average person down there is expecting prices are going to start going down versus my concern is just not have prices going back up. So I think it's going to be a big problem. We saw earlier this week Helen of Troy, which isn't exactly a bellwether. They're down 30% on bad earnings on just basic consumer staples. This concerns me very much because it's a big red flag for the economy, and I think Pepsi is another flag today.
Yeah, Mark, jump in here on how important the CPI number is today, because we've all watched inflation cut into wages, but now it's cutting into profits, as Lee's talking about.
Without a doubt. And I mean, the inflation report's obviously very important because Jay Powell, the Fed, they're watching it. They want to cut rates. I mean, he basically said a couple days ago that he's now going to prioritize the labor market over inflation. And we've had a few good inflationary readings. But, to just kind of chime in on PepsiCo, yes, inflation is 100% hurting them. But they're really not mentioning GLP-1s and how that is affecting their business structurally over the course of the next 3, 5, 10 years. We're talking about a company that sells sugary beverages and snacks. There is going to be less demand for those products for the next 3, 5, 10 years because of the weight loss drugs.
So what do you want to do as an investor then? I mean, do you want to sell into any rally? First to you, Mark.
Well, I am expecting the market will end the year higher, but I'm also expecting we're overdue for a 10% pullback. That's got to happen at some point in time. Yeah. I would be repositioning right now. I think there's a lot of opportunities in healthcare in particular.
Lee, weigh in there. We want to look at interest rates ahead of Federal Reserve Chairman Jay Powell, after Jay Powell's testimony this week. He told lawmakers yesterday during the House Financial Services testimony that the Fed does not need inflation to be below the 2% rate before cutting interest rates. Watch.
Is it fair to say that you would need to see the PCE index dip below 2% at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say. We've said that you don't want to wait until inflation gets all the way down to 2% because inflation has a certain momentum. You wouldn't wait that long. If you waited that long, you probably waited too long because inflation will be moving downward and will go well below 2%, which we don't want.
Yeah, Lee, he emphasized that the central bank will cut interest rates when ready, and it's regardless of the political calendar. Watch this.
You pride yourself in that independence. Do you acknowledge, or do members of the FOMC acknowledge, that a rate cut in September could be viewed as political just 30 to 60 days before an election?
Our undertaking is to make decisions when and as they need to be made, based on the data, the incoming data, the evolving outlook, and the balance of risks, and not in consideration of other factors, and that would include political factors. It's just not appropriate for us to get into the business of thinking about election cycles at all, one way or the other.
The Wall Street Journal's Nick Timrose writes that Powell has shifted his stance on rate cuts, noting achieving lower inflation without a significant slowdown is, quote, the number one thing keeping him up at night. Lee.
I'm not sure I buy all of this.
Yeah.
Let's get real. When he talks about the current situation and the evolving situation, this election is the evolving situation. If you have a candidate who's for slower growth, and you have a person who's going to cut regulations, is going to try to stimulate and get this economy up and running, that is a fundamental part of this economy, and that's what we're going to find in November. So Powell does not have to be called political if they don't wait until they start cutting rates after the election. I think it's a smart decision because only after the election do we have an idea of what this economy is going to look like going into 2025. Furthermore, what people don't talk about, we focus so much on rates, but we never talk about the balance sheet because it's esoteric. It's not something that we really like to talk about. But Powell is slowing how much that balance sheet is dropping off. That's stimulative, right? So he's going slower on that balance sheet. So I don't see how we're going to go slower in the balance sheet and we're going to cut, in September. It doesn't make any sense.
How do you want to allocate capital rest of the year?
Okay. I rebalanced about 150 points ago. I'm holding more 6-month treasuries right now. I'm neutral weighted. I'm not bearish at all. I'm bullish, but I think at 5,600, 500, I think that's all we got between now and the end of the year. So I think that if you're overweight in stock right now, you get back to a nice neutral position. Don't hoard cash, but I've got an extra 5 or 10% cash here because I don't necessarily need a 10% pullback, but you don't think in August with the DNC convention, in late August, that we couldn't just see markets get volatile, bring it down 8%, I start piling in some sell my treasuries, buy some stock? It's going to rock and roll.
So investors are focusing on what's going on in Washington.
I think it's the most underrated risk we have right now. I can't believe Wall Street isn't more focused on that. They have their head in the sand talking about AI all day.
All right. Great point. I mean, Trump's policies, wouldn't they be better for business, or are they?
Of course they'd be better for business. But, let's put it this way. Trump would be better for business. That's not going to be deflationary. And I think that, if Powell thinks that Trump is going to win here, why are they going to start cutting ahead of that?
Yeah.
And so I don't think inflation is bad. I just think the reality is that Trump will start to make GDP go higher, and that's not going to make rates go lower.
Really great points all around. Thank you, Lee. Lee Munson here this morning. Your morning mover is Costco. Take a look at Costco wholesale in the pre-market, up this morning better than 3%, as you can see, after announcing it's raising prices. It's raising its annual membership fee for the first time in 7 years for the U.S. and Canada.